Do you know how professional traders trade gold? Today we will talk about all those factors. Professional traders, especially institutions, hedge funds, and other big players, place large positions in the market, often after looking into global macro and other economic factors. The first and very most important factor is the dollar index, that is popularly known as DXY. US dollar, and gold have an inverse correlation with each other. If USD weakens, the gold rallies, and vice versa. The second most important factor is the real interest rate. So the real interest rate, after adjusting inflation, if the real yield falls, the gold rallies, because gold is generally considered as an hedge to inflation. Other important factors are the federal bank policies and other economic data such as PPI, CPI, the inflation data, because these also have a strong influence on gold prices. A lot of central banks across the globe like China, US, Russia, India, and other European banks have a tendency to buy gold. And when these banks buy gold in large amounts, the gold rallies, which we have seen in the last year as well as the current year. The last factor is geopolitical risk. Wars, sanctions, political instability across the globe leads to bullishness in the gold because the money moves to safety. Now, the other one important factor which traders, global traders look around is the COT report, which is called the Commitment of Traders report, which gives data about the positions in the market by speculative traders and other hedge funds. After looking into all those factors and economic situations, traders or hedge fund experts also look at certain market microstructure and liquidity before committing large positions, such as order book and depth, open interest and volume, put and call volumes at certain major strikes which can act as wall or major hurdles or support or resistance for gold. After looking into all these factors, it is then only the big traders take positions, and that too have proper risk management in place. Thus, it is not just the price you need to look at before taking a position in gold. It is all these factors which I have mentioned earlier you need to look at before committing a trade in the market.